Hey guys, welcome back. And today is a very good and informative video for you guys. Today we're going over bull and bear markets. I know I wanted to bring this information to you guys sooner rather than later. Unfortunately, the crypto market, if any of you guys have been following it, she is dipping and she is dipping hard, which is perfect because that it will help us to explain a bear market today. So without any further ado, let's get educated. So, first question, what is a bull and what is a bear? Well, if you know animals, you already know what those are, but in terms of markets, a bull market is a market or an asset or a excuse me, or a group of assets that are on the rise. Usually that means it's 20% or more from a bearish bottom. What's a bearish bottom? Well, we'll get into that later after we find out what a bear is, right? So, getting back into the bull market. So, a bull market usually occurs when there's 20% or more from a bearish bottom. And what that simply means is once we go to a low enough dip, and we start to rise, that bullish momentum, that upward force of momentum. Usually that's when most people start to get on board on certain assets when they see that it's actually going to perform positively. But what most people don't understand is that an asset will always go up and down. It's never gonna stay completely steady. It's always knowing about how to position yourself and where to position yourself and your assets and your funds, so that you can always be in profit. Now, are you always going to be in profit? Any well-versed investor will tell you you will not always be in profit. It's just impossible, unless I guess you can see the future or something like that. But I can't, so I'm not always in profit. There are definitely times where I take losses, but the point is to set yourself up to where your losses are always going to be less than your gains. If you can set it up that way, then yes, you're going to take losses. That's just part of the game. But they're not going to be, oh my God, I just lost 3 months of rent. You know what I mean? Um, but basically, going back into a bull market, it's just upward momentum. In a bearish market, that's literally, well, I'm not going to say it's literally the opposite, but it is relatively the opposite. Basically, it's, when a market or the interest or the asset falls. But this can also mean that it is stabilizing, and that's what I want to get into when it comes to bear markets. You can't always just assume because an asset is dropping that it's going to bottom out or, go to zero or whatever the case is. You have to take into account, past runs. You need to check your statistical chart data for sure. Make sure that, it's done this last year, the past year before that, and you need to make sure that you're always watching the trends, because you can profit either way. So, when a bear market or when a market stabilizes, that doesn't necessarily mean it's a bear market. That could mean it's a correction, a market correction. And what that means is, perfect example, let's just use Shiba Inu. I'm pretty sure most people know about it, like Bitcoin, right? At this point, more people know about it than they don't. And what a lot of people don't realize is it's one of those coins where if you had got in, let's say a year, 6 months ago, something like that, you could have profited quite heavily from it. But what happens with coins like that, especially altcoins that are backed 100% by us, by the consumer, what tends to happen is we get what we like to call whales, and a whale is just some billionaire who decides that they want to invest a ridiculous amount of money, makes it look like the market is going on an uptrend, and then once enough people start to buy in, they take their profits, right? Some people could call that day trading or whatever the case is. We weren't going to get into that, but just know that a market correction doesn't necessarily mean that it's going to be a bear market. Usually a bear market occurs when you get to a stabilization point and you've been at that stabilization point for upwards of a week or so, at that general stabilization point. Usually you only go up, very little, and you only go down very little, and that's when you know you're in a bear market. Now, a lot of people have asked me, is it possible to, profit in a bear market? Yes, absolutely, absolutely. Positioning is everything. Like I said, you're always going to take losses. That is just part of the game. If that scares you, you need to find a different video. This isn't for you. This is serious investing for the serious investor. And if you are not checking your trends, if you're not doing your own due diligence, finding your own research, or I'm sorry, finding your own research, doing your own research and finding your own answers, then you probably shouldn't be investing. I'm just going to be honest with you. Because it's hard to go and find videos like this one where someone's telling you all these different things, but you have no idea what any of them mean. I could tell you, in 2 months that the bear market's going to end and we're going to have a bull run on this, and then this is why, and this is the statistical data to back that information up. This is what I think is going to happen. But if you don't understand what a bull market is, what a bear market is, what a market correction is, how fear and uncertainty can affect that either way, then investing might not be necessarily for you. But we're going to get right back into it. I don't want to make this video too long. 10 minutes is the goal, guys. 10 minutes or less. So let's just get back into it. I just want to give you guys a really quick sum up of what we've done so far, and that's just go over a bull and a bear market, right? So a bull market, that is just 20% or more on the rise from a bearish bottom. And a bear market is simply when a market or the interest or the asset, whatever the case is, falls and or stabilizes. So with that in mind, what causes a bear or a bull market? Well, honestly, what causes a bear market is going to be fear and uncertainty. Nothing causes assets to drop faster than fear and uncertainty. Now, what do I mean by fear and uncertainty? Well, if there is a new asset that has just come to the table and it doesn't have a lot of utility, you can't purchase things with it quite yet, it hasn't made it to that point, it's not in that phase yet, there's a lot of uncertainty with that. It could become the next Bitcoin, or it could become the next trash. You never really know, and you just have to do your own due diligence with those specific coins. Fear and uncertainty will always be around. It will always be a part of investing, especially in the crypto markets where it is extremely volatile. Once again, I just want to put this in there. I am not a financial advisor. This is for entertainment and educational purposes only. Please remember to do your own due diligence and never spend any money that you cannot afford to lose, because with crypto, like any other investments, you could lose it all. So, continuing on, guys. A bull market needs two specific things to happen. Excuse me. 20% from the low, like we talked about from that bearish bottom. But the other thing is it needs a new all-time high, which means, let's say an asset was at $1, it went on a bull run up to $1.50. Its all-time high, however, is $2. What that means is it has gone on a small bull run, but it hasn't gone to become a bull market, if that makes any sense. It's going on a small run for sure, but until it breaks that all-time high, it won't become a bull market, a bull session as I like to call it, because a bull market just basically is a broad term for everything in the market. Anything that goes up would be a part of the bull market. So those two things are 100% necessary for you to have a bull market. Now, you can always follow the trends, check your statistical data, and you will see that, normally the trends seem to normalize out, go into a bearish state, and then pop back off towards either the uptrend or the downtrend. Now, that's the tricky part, and obviously I'll do a whole lot of videos on that later about uptrends and downtrends and charting data and all that kind of good stuff for you guys at a later date. But I just want to leave you guys with one last thing, so that way you guys can get into profit as quickly as possible. 4 factors for bear market investing, right? If you want to profit, even if the market is going down like it is now. I don't know if anyone has looked at how crypto is doing, but our bags are not doing too hot right now. But that's okay, because that's crypto, and it's always gonna go up and it's gonna go down, and usually it goes farther up than it goes down, so just keep that in mind. But anyway, these 4 factors for bear market investing. Think long term. If you're thinking that you want to put in money in January and then get twice that in February, that's not how it works. Could you possibly, in theory, do something like that? Yes, it has happened before. However, if you are thinking about profiting in a bear market, the goal is to always think long term, never think short term. Second thing, focus on the quality. You need to be making sure that you're doing all of the due diligence and the research necessary for the coins that you want to invest in if you're doing crypto, for the, properties that you want to invest in if you're doing real estate, and for the stocks, ETFs, securities, all that kind of stuff if you're investing in the traditional stock market. If you don't look at an item, and take that into consideration as a personal thing. Like, I am going to back this with my personal money because of something that I feel within me, right? Never back anything that you don't feel personally attached to, because then you're just going to, I'm trying to think of the proper way to say it. You're just buying a fad, or you're buying a trend at that point. And what happens is, if you lose money, you are more likely to never do it again. And I mean investing in general. And that's because you invested a large sum of money, assuming that, because all of these other people were talking about it and all these other people are doing great with it, that you were just going to hop in and do the same. That's not generally how it works. So make sure you're focused on the quality. Make sure you're only going for things that, really stick out to you in your heart. Third thing, don't try to buy the bottom. I can't tell you how many times people come up to me and they're like, man, it was just at its all-time low and I thought about trying to buy it then, and then all of a sudden it just jumped and went crazy. That's usually how it goes. When things hit the very absolute low, or you're trying to wait for the lowest possible price to buy in, a bargain sale as we like to call it, you're probably going to miss it. You're going to miss the opportunity altogether, because you're going to wait, you're going to wait, you're going to wait, you're going to wait, and then all of a sudden you're going to see it just start to scramble back up, and then you're going to try and get in there, and it's just slow, steady investment makes millionaires. Slow, steady investment makes millionaires. A wise man told me that, and I was like, that doesn't make any sense. Go on YouTube. $5 a day to be a millionaire. I guarantee you'll find more videos on that than anything on how to start investing, what to invest in. It's I tell you, you can be a millionaire as long as you do it steady and constantly. Consistency is always key. But anyway, guys, so we've gone over think long term, focus on quality, and don't try to buy the bottom, because you're not gonna do it. I guarantee it. And the last thing, and this is probably the most important thing for any investor, build positions over time. You don't have to be like the big dogs immediately and just throw $1 million and throw 10,000 and throw 1,000 in. Start with $10. Do $10 a week. That's $40 a month. You do that math. I'm definitely not the best with math, but let's see, $40 over 12, 40, 80, 160. Well, you guys get my point, right? I guess I could bring up a calculator real quick here. In fact, you know what? Let's just get this information out there. Because if you did $10 a day, $10 a month, $10 a week, for a total of $40 a month, and then you times that by 1 year, that's $480, right? That's $480 that you've invested in a year. Now, what most people won't tell you is that investments are a long-term endeavor. It's not I'm going to invest this money today and in 2 months I'm just going to be rich, right? You need to be thinking, I'm going to slowly invest this money over time, and then 2, maybe 3 years from now, you will be a millionaire. It's not a question of if you follow the steps. $5 a day, roughly, $40 to $70 a month, just in investing, whatever you feel is necessary or what you believe in, then I guarantee you will reach the goals that you want to reach. Now, I'm just gonna go over this real quick one more time. 4 ways that you can profit in a bear market. Think long term, focus on quality, don't try to buy the bottom, and build your positions over time. I guarantee you, if you do these 4 things, you will be a successful investor, and you will be able to pass this information on to the next generation and the next generation. So that way we can really start building some generational wealth, right? Because that's what it's all about. It's not about making money for us. It's about making money for our kids, and their kids, right? That's the only thing that ever mattered. So with that, guys, I'm so glad that you guys stuck with me all the way to the end. I know it's closer to 15 minutes than to 10. I apologize, but I just want to make sure you guys got all the information you guys needed to be successful. And with that, guys, I want you guys to go out there and be awesome, stay safe, wear your seatbelt. And I'll catch you guys next time.